Okay. So monthly review. Let's look at what the monthly's done. Let's look at some of the major levels. I've already shared the chart in Discord and published the chart as well. So a lot of people have already viewed it, but let's do a quick review as we work our way through this week. So the previous monthly has definitely broken support and closed below that support turned resistance at 1928, a monthly area of resistance. Now there's two decent areas of resistance that price has broken through in the previous month. That one's at 1936 and the other at 1928. Now we are expecting price to jump up, but we'll look at the overall structure, what we're trying to go through the month. So the monthly currently has gone into a range, and we're looking at that range and trying to understand where can market reverse if it does, and what are the possibilities of market continuing its way down. Right, we're going to look at all those possibilities. So when we look at monthly, we have two areas of historical support. We have on the monthly, we have one wick here, two bodies, another wick, and then there's another here. There's a bunch of wicks there, so not necessarily the most major ones. However, the ones at the bottom of this consolidation range, this is going to be the interesting part to see. 1829 to 1813. That's where we are looking at market seeing another major area of support, as we can see over here. Again, the power of the doji, right? Market struggling to break above. Even though this entire monthly flipped, it still couldn't generate the power to break above, and the next one continued its way down, and then eventually consolidating within this range. So we are breaking through a recent consolidation range where we have three monthly candles, the third one eventually breaking above. We're entering into that range. If we break below, on the left hand side, it's a monthly consolidation range. Will we consolidate within that range? Well, there's a chance. There's always that chance. What's the pressure? That is what is going to decide if we are going to just keep on driving down like this drive here. We don't necessarily, we still have uncertainty in the market. We still have the concern around recession. We still have concern about job market. We still have concern about interest rates. We know that for the next 2 years, we might still see steady increase in interest rates, which means, the companies, the businesses are still not out of the blue. Service sector is still struggling. So there's a bunch of things affecting it fundamentally. And technically, that is where what we see recent history has created, the structure monthly has created, is giving you enough indication as for the current one to dive down, probably face some struggle here, face some struggle. So 1907, 1874.26. These are different areas where price can see some amount of struggle, but still on the monthly, it should be able to continue further down. It should be able to take support at between 1833 and 1813. So major area resting a little bit below there. We have bodies here, two bodies, a bunch of wicks within that range. So this is where it's a really interesting range. So on the lower time frames, this is where we're going to try and look for better areas of entries. Now, when we go into the weekly and we try to take a look, let's adjust this a little bit here, and there we go. So on the weekly, strong area of resistance, right? So strong area of support. Now, previous time when we went up, we took support at 1810. So that's where we are expecting the price to take support again. And we can see on the left hand side, price has consolidated, created a good amount of support before breaking up. Couldn't break above, faced rejection within a range it's consolidated in the past, has rejected in the past over here as well on the weekly, rejecting, coming back down, taking support of the structure that it did not take support of on its way up, and then continued its way up. So now this is the exact thing we're going to try and see. Is the weekly going to break down, take support, and jump back up? So looking at the monthly structure that we've seen, when we go a little bit to the left hand side, you can see that the weekly has a lot of structural support, resistance within those ranges. So price has definitely respected that quite a lot of times, the monthly one on the weekly. So validating our expectation that price could reverse within those ranges. Let's look at the daily. Now 1907 is what we saw based on the monthly, is the exact location where the doji has formed. On the daily, price closing back above that range, going back above right now, topping out, coming back down, and we'll take a look at that as well. However, the current monthly giving us a good indication. We would expect the current monthly to, at this point in time, jump up. First target is going to be 1929, 1928.6. The body of these two candles here on the monthly, that's the range. However, the range can go up to 1936. So price can still try and tap above. Now, we're going to look at lower time frames on how far above it can go. Are we expecting a tap into 1931 and then the drive down? Well, possible, right? But it can still go all the way above. It doesn't have to exactly, so like something of this sort, right? Doesn't have to exactly reject at that specific level. It could still try to break above and then come back down. Again, news or anything could do it. So we just need to look at what the market is going to bring up through this week. It's going to be an impactful month. So let's see what the market brings to us. Okay. So previous week closing a doji. So looking at the monthly, we were expecting 1933, 1937. Let's look at monthly. So 1933, 1937. Now let's look at weekly, 1937. So we almost went there, but we couldn't. So can we expect price to go up into that range and then reject? Why not? You know, it's still possible. So currently we are looking at a rejection, market trying to go back up to 1929. This week at least breaks above 1936. This is going to be my final expectation. I don't expect price to go all the way back up to 1950, because when we go back to the daily, so the daily supports the theory of market trying to go up to 37 and then rejecting down. However, we have enough area of rejection right there. Price going back into that range does not seem plausible. So market rejection at that level at 37, based on the monthly, is kind of validated with the structure that we see right now. Right now, the expectation that gold could just continue to melt. Well, again, if we look at the daily, there's scope for price to try and make a push up. We have taken support at an area where price has historical push towards the upside, call it a demand zone or order block or whatever. Price dipping down, creating support, taking rejection, not able to break below. So however, on the monthly, we are still secure. Monthly still telling us that we could still see a spike above and then a break below. So 37 is where we are looking at it. But if we go back into the weekly giving us a strong indication of 28 being the current target. Now, coming back to the monthly, is it necessary for price to go all the way up to 31, 37? Not necessary, right? It could leave a small gap up there. It doesn't have to fulfill the entire gap. So, so something of this sort, price mitigating some part of the gap, leaving some behind, right? Because price is going to come down eventually and mitigate some of that risk, some of that gap. It doesn't have to do it all the way. We are expecting a range, and we'll look at more technical evidence on the lower time frames, that is the daily and the weekly, for indication of what market is trying to do. So we've seen the highs getting rejected, giving us that sell signal, price dipping down based on a rejection on that trend line there. So with the market rejecting on that trend line right there, the push down, doesn't necessarily have to be sufficient, right? We might not just see the month just dipping down like this, right? This entire fall. We could still see price dip down, build power, and then try to go back up to contest the highs. That is still plausible. So there's no reason for us to consider that. And again, we have a consolidation range there. So we could pretty much just consolidate within this range, mitigating this gap on the monthly and then price eventually going up. So this is long-term game, right? We're talking about the rest of this year, probably spending into this range. So we'll see what happens. Right now, this seems to be an area that we could look for potential buys. So I'm going to look for hedging buys in this bar right there between 1828 and 1810. So overall, considering what's happening on the monthly, a drive down after a push up to 1835, 1937, 1928 being the range, and then price continuing its way down is the current expectation. So 1926 are the sells that I am currently still focused on, considering what's happening on the monthly and on the weekly, and then look for more potential entries as we go through the days, right? So that's pretty much considering the monthly outlook. So just considering everything that we saw right now so far on the monthly, we have to be very cautious in taking trades. There are going to be crucial areas where price can reject and move, and we'll look at that on the weekly. But the current monthly giving us a good indication of price giving us a clean move towards the downside. And when I say clean, it has a structure, so it's going to reject at certain portions. So us expecting blindly that, okay, this is the exact spot where price is going to reverse is not true. Monthly is giving us an indication. Monthly closure takes time, right? There's a lot of days involved, a lot of weeks involved. So we're going to look at the daily and the weekly to trade on those terms that the monthly is creating for us. So we're going to trade the structure that the monthly and the weekly is creating using the daily, and then lower time frames to find the best entries within those ranges. So be very cautious, keep check in everything that Fed's mentioned so far. Last week was very impactful. Last month was quite impactful. A lot of data coming out. Expectations about interest rates have been put forward. There is no clear indication whether they're going to go up and increase the interest rate this month. But they have mentioned for the next year, this year and rest of next year, we're still going to see some increases. They don't expect inflation to go down. So that means the cause of the concern is still going to be the disruption of demand and supply, labor markets, basically normalization. So the macros are dependent on the micros, and we need to look at what is the micro situation right now. So microeconomics is telling us macros still are in trouble. There's still policy decisions to be made. We have elections coming up next year. So like considering all of that, we're in for an interesting few months. So when you're looking at the overall structure, trying to take big trades, trying to take long-term trades, you need to be very, very careful. Okay.